Hello, everybody. This is Jeremy Ritz, your host here of the Traders Podcast, here celebrating episode number 34. We are moving along. We are in the month of October. This is the first episode in October. Fall is here. Football's here. What a great time of year. And interestingly enough, when you look at seasonality, when we're talking about the stock market, September and October really aren't that good. And when you think about election years, October really isn't good. And so what I mean by that is it's not a good month for the bulls. Typically, the bears are running things, but that's not the case here today, as the bulls are running things up off of good jobs number, off of an unemployment rate that was lower than expected. And so we'll have to see if this sustains and holds, but we'll talk about all that and more here in episode number 34. And today, what I really want to spend some time talking about is the whole concept of losing and the concept of drawdown, which basically means whenever your account moves from, let's say you have $100,000 in there and you have different investments, whatever, swing trades, and you see a big, large drawdown where it drops $10, $15, $20,000 because it just happens to be a down cycle in the market. And strategies and ways to handle those drawdowns, but also too, just knowing that, hey, drawdowns are a part of trading. And there was a tweet by a trader out there, investor Jake Wujastic. I think I'm pronouncing his name right, so I'll show that tweet here. But it got me thinking, and I wanted to share that. And then also, too, a major big-time investor, Stanley Druckenmiller. I believe I'm pronouncing that correctly. I want to just share some of his losses with all of you out there so you could see that, hey, if you're going to trade, part of being a trader is losing. It's going to happen. It's part of this process. And a lot of times working with traders, some people can't handle that. They feel like they just have to win every time they're trading. And they often put too much pressure on themselves, like, oh, I've got to make money. I got to pay my bills. Well, I will say this, getting into trading and automatically right away saying, I got to pay my bills with my trading without paying your dues and putting in the time, that's undue pressure you're putting on yourself. You have to give yourself time to do that and grow into that process. So we're going to get into that today. We'll also take a look at Mr. ROKU. But before we do that, let's just get an overall state of the markets and where we are. But actually, before we do that, I want to take a moment to announce something that I'm very excited about. My first ever course called Profit Pioneers. It's going to start October 29th. And basically what I'm doing is teaching a back testing process for how you can develop your skill in trading by practicing. So as an athlete practices his or her sport, I'm going to show you how you practice trading, how you can simulate the markets, how you can keep track of your stats, how much money you're making through your practice trade so you can gain confidence. And then you take that and apply that to the real markets, and you're going to enhance your ability to trade. And so this is going to be a 7-course project that I'm doing, again, starting October 29th, completely free. And register. The registration link is in the show notes. Sign up for it, share it with your family and friends. And what I would encourage you to do, if you're going to sign up for this, at least complete the boot camp that I've offered. And I'm going to put that in the show notes too. Complete that boot camp so you can at least pick up where we're going to start off with. So you're going to have that background for this. If you just roll in with no trading or investing experience, you're going to be a bit lost. So make sure you at least complete that beginner's boot camp that I have there. So check that out. And without any further hesitation, let's talk about where we are in the markets. So as of recording this today, Friday, October 4th, this was an important day because we got data that was released that a lot of people were waiting for, and that is non-farms payrolls and unemployment rate. And if we rewind and go back to the beginning of August, the thing that really set the flash crash in motion was a higher unemployment rate that was not expected, and then a low non-farms payrolls. And today, the data was so much better than what was anticipated. And we did see a bit of a rally here in the markets. Now, it's not a huge rally by any stretch, but things are moving in a positive direction. And this comes after some geopolitical tension that we saw earlier in the week because Iran launched missiles at Israel. You saw the market sell down about 72 points, I believe, on the SPX. Everything dropped and the volatility spiked in the markets. And there's a lot of uncertainty. And if you kind of look at the landscape of everything happening right now, you not only have the presidential election that's coming up, I think November 5th or 6th. You also had the port strike that was happening. That was just resolved yesterday evening because they agreed to go back to work and continue to negotiate. So you throw that into the mix, which could really impact the economy because it's holding up deliveries. It can boost inflation. And then you also have the uncertainty about whether or not we're in a recession, which the data is coming in positive. Now, there's people out there who say that this data is cooked and they're fudging the numbers, whatever the numbers are, what they are, and that's all we can go off of. But then you factor in that geopolitical tension, and that's four things right now pressing down on the markets. And if you've been following the Traders podcast at all, you know that the markets dislike uncertainty. And so until that uncertainty is resolved, we're probably just going to keep moving sideways or have a lot of volatility in the markets where we spike up, we come down, we spike up, we come down. And that's really what's been going on. And the way that I'm approaching these markets now is depending on where we get our big pop or run, at that point when we peak, I'm trying to move into cash and be ready for a drop so that I can then deploy my cash and take things long. So if we end up running into October, then I'll anticipate a pullback after the election. And then I'll wait for that pullback and then I'll go in long on a lot of different things because I'm still bullish on this market. If we pull back in October and things drop, then I'll wait till that bottom comes in and I'll buy on the way down. And then I'll be ready for a pop following the election. So just two of the ways that I'm looking at this thing. But again, lots of uncertainty out there, and we have to have some of these things, if not all of these, resolved so the market makers have some stability in looking at how things are going to play out. So that's just an overall look at what's happening in the markets. And we're getting ready to kick off a new earnings season too. That's going to start next week. We'll have the big banks reporting first. So all eyes will be on that. I believe that kicks off on Thursday of next week. And we're going to get some inflation data next week. I believe that's going to happen on Thursday and Friday. So be ready for that CPI and PPI. And Wednesday, we'll also get the FOMC minutes. So the volatility doesn't stop. And I often say that the stock market is like a soap opera because every week there's something new that's happening in terms of data that's being released out there, or there's some type of event that's causing this thing to move up and down. And it's a ton of fun because not only is it interesting, but you can make profits from it. So I wanted to share that with you guys in terms of where we currently are at this stage in the markets. All right, guys. So I wanted to spend some time talking to you about the whole concept of a drawdown. And I'm going to put up here on the screen this tweet from Jake Wojastik. You could follow Jake on X, Twitter, whatever you want to call it. And Jake does a lot of charting that he puts out there that I really enjoy his stuff. He also has a paid subscription. I'm not part of that, nor do I get any kind of kickback from it, but I do enjoy his work. And he had a really good quote that I wanted to share with everyone out there when I read it. And here it is on the screen. And it says, if you can't deal with drawdowns in a trade, just close up shop and don't trade at all. It's almost guaranteed with every trade you make, unless you just get lucky. And basically what he's saying there is that losing or being in a trade that drops is part of this process. It's part of being a trader. It's part of being an investor. Rarely do you get into a trade and automatically, boom, it runs a target. Not to say that it doesn't happen, because it does, but you really have to savor and enjoy those days. And people who've been doing this for a long time know that that's a rarity, and it feels really good when it happens. But we know that there are going to be pullbacks. There's going to be corrections. There's going to be drops in trades. And it is an uncomfortable feeling to being a trade. Let's say that you have 1,000 shares of something and it drops $1. Well, you're down $1,000. And let's say that your stop is set, so you have a $4 range for your stop loss, and it drops down another dollar. You're down $2,000, and it drops another. You're down $3,000. You only have one more dollar to go before you get stopped out. That could be a really uncomfortable feeling, right? And that's where the whole concept of patience comes into play, because I've been in several trades where that has happened, where it is just dropped right out of the gate, and I was down significantly. And I had to prepare myself mentally, like, all right, I'm going to get stopped out. I'm not just going to exit the trade and take a loss. We'll give this thing some time to come back. And it is rallied and it has come back. And not only did it become a profitable trade, I've had many cases where it ran and exceeded my profit target. And so this comes over time. And this is one of the most important things to learn about trading. And it's one of the hardest things to learn. And that's patience. We all want success right away in trading and investing. And for some of us, it can happen right away, but it's not without its punches in the face. It's not without losses. It's not without bruises or injuries. You're going to get maimed in the market. It's just the way that it works. And you have to know that, and you have to accept it, because if you don't, and you go into this thinking that you're just going to win every trade, when you see that that's not a reality, you're going to set yourself up for thinking that you're terrible at this, or that you suck. And that's just not the case. You have to know that this is part of the process. In some of those cases, when the trade draws down or you go negative, it's going to stick and you'll get stopped out and you're going to take a loss, right? It's part of the process. It's going to happen. But you have to be okay with that. You have to embrace the loss. And again, I've said this on the podcast several times. The people who are most successful in this are those who don't get discouraged by the losses. All right. Now, if you're losing every single trade, then yeah, it's time to find something else. But if you find that trading and drawdowns and losses are giving you anxiety, they're making you stressed to where you're worried about it, then this is not for you. And that's the thing. Trading is not for everybody. It's really not. You have to have the ability to push through that, and you have to have the ability to be resilient. And you also have to have the abundance mindset, where you believe that there is so much out there. Again, we talked about how much money is exchanged in the market, $4 quadrillion every year. And what we're looking for is a very small percentage of that, fraction of that. And so you have to have that abundance mindset, that if you have a loss, 2 losses, a losing week, a losing month, that you know that you're going to be all right. You're going to bounce back. All right. But that's where having patience and pushing through and being able to get over that adversity is important. And I also have this other tweet that I want to share with you. And I'm going to put this up here on the screen too. This Hunter guy, I don't know who this is, but Stanley Druckenmiller. Here we go. This tweet says, Druckenmiller said yesterday that on 4 separate occasions, he's lost more than $1 billion in a 24-hour period. Think about that for a second. This guy, trader and investor, has lost $1 billion in 24 hours, and he's done it 4 times, right? And do you think this guy felt like, pardon my French, shit? Yeah. But did he give up? No. This guy's one of the best that's ever done it. And I guarantee you, he is made well in excess of $1 billion throughout his trading and investing career, right? And I show this to you because I want everyone to see that this is all part of the process. Losing is all part of the process. And we just have to understand that and accept it. Don't lose $1 billion. Don't lose your entire account. Again, that's why we protect our risk and capital with stop losses. But just know that it's part of the process. And don't beat yourself up about it. It is what it is, right? And the sooner you could do that, and the sooner you could be patient and allow yourself to grow and study and practice and give yourself time and allow yourself to grow into being a trader and not say that I've got to do it right away. And if I don't do it right away, then I quit. That's not how this works. Be perseverant, be patient, know that drawdown is part of the process, and you can be a successful trader and investor. So that's what I got for you today for this topic. And now we're going to take a look at Mr. ROKU. Time to put on the shades. Here we go. All right, guys. So here is Mr. ROKU. And let me get rid of some of my drawings here that I have on here. Just kind of sketching out what potentially could happen. But you can see that Mr. ROKU is just kind of hanging out, trying to push higher here and clustering above the 10-day exponential moving average. We're looking here on the daily chart. You can see we're above all the moving averages still. We're above the 100. We're above the 50. We're above the 200. The only thing overhead of us is the 200 SMA on the weekly up there at 153.87. We have the top of this channel up here around 112, 114. And we also have earnings coming up here on October 30th, which is where I think this thing is going to get that big push higher. But we're getting a nice close here today. We'll see how this candle finishes if we do get a bear candle closing above the 10. But really, this just looks like some sideways action here, that this is building steam and momentum before it pops higher. And so, just think about where this thing has come from. From this low that it made on August 5th, that was probably on the flash crash, we have climbed a total of $31. And there's more upside here available on ROKU. And the thing that I'm watching here, it's filled this gap here back from the earnings drop, but there's this initial gap that happened on earnings. And this is, how much is this gap here? This is a rough estimate, about 12. This is a $12 gap. So this is the next thing that it has to fill. And more than likely what will happen is it needs a catalyst. The catalyst will be earnings. It'll push it up through there, close this gap. And then we'll see if it could hit the upper part of this channel. And I have on here $100 target on Mr. ROKU by end of October. I feel pretty good about that. Now we got to get way up to here. So how much more of a move is that for us to hit 100? Let's see here. Let me measure this out from here up to 100. All right. And this is not perfectly exact, but about $24. Mr. ROKU is going to do it, right? It's going to make it happen. I'm going to make it happen. So that's Mr. ROKU here for today. And we'll take a look at Mr. ROKU next week. Like it's a person, man, right? And the one thing I'll mention too here, we could see that there's a lot of upgrades, price upgrades here on ROKU. You remember just a few months ago, people were given downgrades. So how quickly things change in the market. And again, going back to what we just said a little bit ago, patience is key. All right, everyone, that's going to do it for episode number 34 of the Traders Podcast. I'm your grateful and appreciative host, Jeremy Ritz. Thanking you so much for joining me here today. It's been a lot of fun sharing my passion and excitement for the markets with all of you. And don't forget, sign up for Profit Pioneers. It's completely free. Seven sessions, over 10 hours of education. Learn to trade before we get the Santa Claus rally, and you enter the best 6 months of the market, November through April. So sign up for that. That's in the show notes. Make sure you complete that boot camp first. I'll have that linked as well. And reach out to me. Let me know if you have questions about trading, investing, couragepaysbetter@gmail.com, or put it in the comments. I'm here to help you. And let me know if there's a topic you want to see covered on the podcast. I will make that happen for all of you. But with that said, have a phenomenal weekend. I will see you back here next week for episode number, I keep hitting my table, episode number 35 of the Traders Podcast. Have a great weekend, everyone, and take care.